This is going to be the beginner's course where we just walk through the orientation. This is really meant for members who your friend may have invited you and you're not really sure what's going on. You've never traded before. This is your kind of first exposure to what's going on and you want to kind of get into the action quickly. This is going to give you a basic overview of what you're doing, why you're doing it, and how to get started. So let's jump right in. So the first thing I want you to understand is before you get started, we need to understand what a stock is. So of course, we're talking about trading stocks on the stock market. We need to understand what this stock thing is, what it's all about, and what does it mean to own a stock. Why would you spend your money on this thing called a stock? So we're going to kind of jump into that and understand a little bit about that, then we'll move forward. So the definition of a stock, also known as an equity, you'll also hear equity markets and equity out there. It is a security that represents ownership of a fraction or a small piece of a corporation, a company, a publicly traded company. So owning a stock means that you literally own a company, not the entire company, but you're entitled to ownership of a piece of that company. So this entitles you to a proportion of the corporation's assets and profits equal to how much stock that you own. So that's why stocks are also referred to as shares, because you own a share of the company. Again, you literally own the company. You are a business owner. And I want you to have that mindset right from the get-go. You own a piece of the company, okay? This also means since all shares are equal, what's good for the company is good for you as the owner, and what's bad for the company is bad for you as the owner, okay? So keep that in mind. Now, being an owner of a company entitles you to a few things, and we're gonna have them up on the screen here, but we're gonna take a little bit more of a deep dive into each one. The first thing is capital participation. We live in a capitalist society. This is where the capital in capitalist comes from. So we're going to take a look at that in more depth here in a moment. It also entitles you to dividends. So you get payments sometimes if the company's doing well. So we'll take a look at that as well. And most importantly, for the power part of it, you get voting rights as entitlement to owning shares of a company. We're going to take a look at what that means as well. So let's go to capital participation. What does that mean? So when you buy a stock, you are literally investing in capital. Again, that's where the capitalist and capital and capitalist comes from. If the company goes up in value because they did a good job, made a whole lot of profits or something like that, your share of ownership is going to get more valuable. It's going to appreciate. And if the company has a bad spit, if it goes down, loses value, your share of capital is going to go down. It's going to depreciate. And we call these capital gains and capital losses. So one other piece to understand is the difference of where you buy your company and then where you sell your company later is going to determine your profit and your loss. So when you go to sell a company, all of that money that you get at that time is not your profit. It's just the difference from where you bought the company and where you sold it, if you made any money on it or profited. A quick little tip, if you hold your business for more than a year, more than 12 months, it's considered a long-term capital gain or loss. So we'll get into that later, but just wanted to throw that out there to get your mind kind of pointed in the right direction. Next, we'll touch on dividends. This is the owner's paycheck. Dividends are issued by companies as a way to convert profits into pay for the owners. Now, why would they do this? Why would they shovel out cash in this way? Well, don't forget the people that run the company also own a lot of shares of the company, and they want to get paid too. So some companies will issue dividends as a way to return profits directly to the pockets of shareholders. This payment generally, although not always, is issued every 3 months and usually announced during the company's required earnings report that they have to deliver as part of the agreement to be listed as a publicly traded company. Dividends also can have a favorable tax treatment. Look into that with your tax advisor a little bit more, but there's different regulations around dividends sometimes. And a popular strategy that a lot of investors employ is to use those dividends to buy more of that same stock, that same company stock. This is referred to as a dividend reinvestment plan or a DRIP plan, dividend reinvestment plan. So keep that in mind as we move to voting. Voting is one of the things that gives you power over a company. So owning shares of a company, it gives you the right to vote on certain large company issues and policies, such as who the board of directors are. You can vote on who sits on the board, and the board convenes to set the direction of the company and pick the CEO. And the CEO actually runs the company. So you can imagine picking the board of directors has a large sway on the direction of the company. Shareholders typically have the right to vote on board of directors, large company shifts, executive compensation, things like that. And any entity, that could be a person or a group that owns 50% plus one share, can completely control that company. So basically only that person or entity's voice is going to matter, even though they don't own the entire company. They control a majority of the shares, therefore their vote is the one that matters. Therefore they are said to control the company. So keep that in mind. All right, so next we're going to get into the actual stock price. So say you're here, you're ready to go ahead and get started. You want to hit the ground running and get involved in this trading thing. So I'm going to walk you through your very first trade. So we're going to go through a couple of definitions and we're going to get right into it. A stock price is basically the value of the entire company sliced up into tiny little bits, as we talked about before. Each stock is an equal share. So stocks are identical to each other as long as they're the same class. There is no difference between my shares and the CEO's shares. They're all the same. The only difference is how many each of us has. Every share, again, is the same. The change in price from one means that all shares change at the same time. So if my stock goes up a penny, every stock goes up a penny. It's a very powerful concept. Make sure you understand that. This in turn means the entire value of the company changes every time you see the stock price change. So you're talking about companies that are worth billions and billions of dollars. They have millions of shares out there. Once one of those shares changes in value a penny, the entire value of the company goes up or down by that amount times how many shares are out there. So keep that in mind. Now, this change is determined by the trading actions in the markets. So as these shares are changed back and forth, it is changing the entire value of the company based on people buying and selling. So when you're buying a stock, you're really valuing the entire company at whatever price that you bought that single share. And it happens millions of times every day for all the companies that are traded. All right, so now we're going to take a look at how to buy a stock. You're ready to go ahead and get going. What do I do? So in this walkthrough, I'm actually going to be using a program called Think or Swim. This is issued by TD Ameritrade. So those of you that have TD Ameritrade, you're not going to automatically have this software. You just have to download it and log into it. But it's called Think or Swim by TD Ameritrade. You can find it on the App Store. You can download it, all that kind of stuff. So it's out there. This software is a little bit more for once you get a little bit more advanced, but all software that you're going to find, Acorn, whoever else is out there, you're going to have pretty much the similar interface, or at least a similar terminology to look for. So I wanted to keep this terminology the same because it's going to be the same on just about every platform. All right, so when you're ready to make your first purchase, you want to locate the stock that you want to buy. For this example, we'll be using American Airlines. So you're going to look for a section that says quote. Now, what quote means is it's going to tell you the information about the particular company that you're looking to buy. Now, companies trade on the exchange using a stock symbol. And the symbol for American Airlines is AAL. American Airlines, AAL. So you're going to type that into the quote box and you're going to hit enter. And that is going to take you over to the actual information of the company. And you can see here, we have all the information about that particular stock, the stock price and everything like that right there. So once you locate your stock, you're going to see a button somewhere on the screen that says trade. It may also say buy and sell. On this particular screen, it has both, but you want to locate trade and go ahead and hit that trade button. And then once you do, it's going to take you over to the order sheet or the order screen. As you can see here. So this is the order editor. Now on this screen, you're going to see some information about this stock, and we want to make sure that we are verifying a few things. So when you do pull it up, the first thing you want to understand is, do you have the right stock pulled up? So you can see the symbol right here, AAL. That is our correct symbol for this order. I can't tell you how many times people have put in the wrong symbol and bought the wrong stock. And in the stock market, there are no undo buttons once you do something. So you want to double check before you pull the trigger. Not AA, not AAR, it is AAL, right? So just double check. You want to make sure that you're looking at the current price and you understand how much the price has changed and what the direction of the stock is and everything like that. You do your due diligence and make sure you're comfortable with the price that you're buying at per share. On the screen, you can see the current price is currently $16.74, and it has gone up $2.36 today. So this is going to give you an idea of where you should expect to purchase your shares at. All right, you also want to make sure that you are buying and not selling. This is a common mistake that people make, is actually selling instead of buying. You can see on this particular screen, it's pretty obvious because they color code it, but not everybody does. So just make sure that you are appropriately buying or selling. This is part of your due diligence checks. And believe me, even experienced traders make these mistakes as they get very comfortable in their trading and kind of let safety go to the wayside. So you as a beginner, just check and make sure that this looks like it's supposed to look. All right, next, you're going to enter the amount of shares that you want to buy. So on this particular example, we're going to be buying 100 shares, but you might only be buying 1 or 2 shares to start out. So just make sure that the quantity number states what you think it should say or what you want it to say. All right, next, if you want to, this is an option, but you can set it to have a limit on the price that you're willing to buy at. So stocks move all the time. The price that you see currently is not necessarily going to be the price that you get it at. and you might be working with a limited dollar amount that you want to work with. So brokerages give you the option to set a price as the maximum amount that you're willing to pay per share. This is called a limit order. Now, what happens with this order is it goes out to the market and it tells the market, okay, I don't want to pay any more than $16.70 for this particular stock. So you're going to hang my order out there until somebody is willing to come down to my price and pay and sell to me at the price that I want, or I'm not going to buy anything. So that's what a limit order is. And the order will hang out until you get a person that is willing to sell at that price for you. The other alternative is to set a market order. Again, that's market order. This is what most people do because they want the stock right then and there. What a market order will do is it will go ahead and accept whatever price happens to be out there at the moment that you press the send button, and it will get you that price. Now, you don't know exactly what price that's going to be. You have a reasonable expectation by looking at the numbers at the top, but it's not necessarily guaranteed. A limit order will guarantee your price, but not necessarily that you will get it at that particular time. Now, along with that limit order, if you do choose to set a limit order, you're going to get a time option. How long do you want that order to hang out there until it just says, okay, we're not going to get our price and let's go ahead and cancel the order? Generally, you have two options. You have day and good till canceled. So if you choose day, that means your order is only good until the market closes that day. Then it will go ahead and expire and cancel itself. If you do good till canceled, it'll hang out there for up to probably about 60 days until the order goes through. This is good if you know exactly what price that you want to buy, but the market isn't necessarily at the price that you want right now, but you're pretty confident that it'll get there, in a couple of days, weeks, tomorrow, whatever. And you want to have your order out there so you don't have to watch it all day. So you can go ahead and put in a good till cancel order with a limit to say, I want this thing at 1670. I know it's probably not going to happen today, but whenever it gets there, go ahead and buy it for me. I'll be ready for it. So that's what a limit order is with good till cancel. If you do a market order, you're not going to have that option because the order is going to go through immediately. So there's no need for it. Lastly, you want to go ahead and confirm how much this trade is going to cost you. Do you have enough money to place this trade? Does everything look correct? This is going to be how much money comes out of your account. If you're doing a market order, it could move around a little bit. So not necessarily, this number might not necessarily be your exact cost because we don't know how much you're going to pay for the stock. But with a limit order, this will be the amount or nothing at all. So go ahead and confirm this. Make sure that you have enough money in the account to place the trade. And then you're going to go ahead and hit confirm on this particular screen. It's at the top right. You're going to hit confirm. Now, hitting confirm does not go ahead and put in the order. They're going to give you one more screen, which we're going to take a look at here. Now, this screen is the order confirmation screen. The reason why they give you this extra screen is because of all the mistakes people make when placing their order. So this is just one more stopgap to say, are you sure? Does everything look good? Because there's no undo button. There is no going back once you hit the send button, right? So you're going to check this screen, make sure the price looks right, make sure the money looks right, make sure the stock looks right, everything looks right before you hit that send button. And this is the last chance before you hit that button up top. And once you hit that button, you're good to go. And the market, the order has been sent off to the market. Now, once you have that order off, most people are going to ask, okay, how do I know if I got the stock? What now? What do I do? Where do I look for it? There's going to be a screen somewhere in your software that's going to say orders or history. but most likely orders. You're going to click that orders button, and then you're going to see the status of your order. The two statuses that you're normally going to see is going to be either working or it's going to say filled. So working on this particular screen is right here, and you can see working, and then you can also see filled right next to it. And then the order screen, there's usually a whole separate button for it that you're going to look for to locate this particular screen. In this example, it says rejected because I'm currently recording this on a weekend, so the market's not open to accept the order, but normally it would say working or it would say filled. Now, if the order is working and you change your mind and you want to get out of it, you can click into the order. You just touch it. It'll take you into the order itself, or you can cancel it, or you can adjust your price. You can do all of that until the order becomes filled. So sometimes people will try to put in a limit order thinking that you're going to go ahead and get a price, and they don't. So you can adjust it from there inside of that order to change your price up. All right, so that is about it for our introductory lesson here. I hope that you will consider joining me for future lessons. This is going to be a free preview of a much fuller course that I'm currently working on to give you full education, take you all the way from your first trade all the way to trading options and day trading if you want to, or swing trading and all of that good stuff. So I have that course currently under development. You can get some information on it at the website posted here. And this will show you a little bit more information about what I'm looking for and what I'm trying to accomplish. But I do plan on making some more of these videos. Please give me any feedback that you have and post it in the comments, and I'll see if I can adjust or add more information to it. Until then, thank you very much for joining me, and we'll see you next time.